Start. So what's up, guys? Today is the 4th of January 2026. A great year. We are looking forward to see great things happen, great results, more exponential high highs. It's gonna be mad. BTC, GBP USD, US30, gold, and it's gonna be crazy. So without further much ado, I want to give you the weekly analysis. I wanted to do the weekly technical analysis for this week. Yep. So this weekly technical analysis of the 5th till the 9th, I'm anticipating to see high volatility in the market because again, it's now whereby the markets have now come back, or again, many traders have gone back to trading. And let's see which are those days that we anticipate to see opportunities in this market. And as usual, we'll get started by having a look at the economic calendar, or again, the fundamental analysis. And so with that, give me a minute. Let's log in. Yep. Yep. Just a minute, just a minute, just a minute, just a minute, just a minute. Economic calendar. Calendar. Yep, there you go. So we have the economic calendar of this week, and as usual, we guess we're having a look at this economic calendar and see which are those days that we anticipate to see high volatility in the market that can drive or give us volumes in the course of the week in between the 5th till the 9th. And so let's get down. And tomorrow I don't trade much on Mondays, but I already do have running trades. But again, we do have very high impact that are coming up on the euro. That is this affecting Spain. Yep. And again, on the Australian dollar, we have medium impact news. And again, on the pound during the London session tomorrow, we do have medium impact news. And again, very high impact news during the New York session that will be affecting the dollar. And on Tuesday, it's gonna be a holiday, is it? Yeah, it's gonna be a Christmas Eve holiday for the euro. So we may see some slight slowdown on the euro. But again, you can see still on different countries, that is Germany, we have high volatility news that are coming up. It's gonna be crazy, it's gonna be massive. And again, it's also focusing on the German inflation rate. Oh wow. So that will give us some high boost in the market, whereby I'm looking forward to see the euro, like euro out, euro New Zealand continue being on that massive sell-off, but they are trying to break major support levels. If they break those major support levels, then the market will be continuing to melt down on that current understanding of how I had been seeing this technical structure of the euro. And on Wednesday, we can see we have very high impact news that will be focusing on the Australian dollar, and that's the CPI of the Australian dollar. And again, on the inflation rate, that's one of the pairs of interest that I do have, and I'm looking forward to see the Australian dollar heavily bullish, continue heavily bullish, and that will be keenly determined still on what will happen on this Wednesday. And again, on the euro, we have very high impact news focusing on the inflation rate, different countries. And you can see on the dollar during the New York session, we do have very, very high impact news that are coming up on the job openings, ISM, PMI, and the APD employment change for December. On Thursday, we still have very high impact news that are coming up on the euro and the dollar index, which will be focusing on the initial jobless claims. We didn't have the NFP last week, and I'm hoping to see the NFP come this week. So we do have the NFP coming up this week, and it's gonna be a crazy week starting from Monday, Tuesday, Wednesday, Thursday, Friday. So the market has started surging. You could make even your entries quite early at this current point. And depends on you how you want to swing, whether you want to be a day trader, depends on you. But we just need to follow up the structure of the market. And now let's get down to the technical analysis and see what opportunities do we have, or which are those areas that the market is trying to liquidate itself, then again continue pushing in the direction of the trend. So it's a new month or a new year, and we have different levels. And you have seen last year the market has been ranging from this current area since April. So the market could be the swings could be happening probably. If you can see last year, from January, February, March, April, Then again, all the way from April, the market came at a range. So here you have the weekly lower high, lower low, and this now the previous monthly resistance, monthly support. We had been looking forward to see this current area, weekly lower high, be liquidated, create a new lower high, and I'm looking forward now to see new weekly lower lows being broken to create new weekly lower lows. And the structure for this chart is based on the dollar index. We have this weekly lower, higher low, higher high. So we could come liquidate at this current point because this is the inner structure. Once it's liquidated, this could now give us the momentum of understanding what is likely to be happening next. But there's a huge number of pips in between this current area, the price of 98 to the price of 95. So when you look at it on the substructure or the still on the structures of the weekly time frame, the market has come at a crucial point, which again is a 61.8. But here we have been forming some lower high, lower lows based on the weekly lower time frame. Lower high, lower lows, lower high. You're looking forward to see new lower lows be created, whereby the market, if it breaks below this current area, this is the monthly support, then you'll be looking forward to see it melt down all the way to this current level, the price of 96 or 97. Then again, a break below that, then we'll be now looking forward to see new weekly lower lows being formed below this current area. And that's when we'll be anticipating to see the market blade all the way to this current area to the price of 95. And from there, we could now check whether that will be our major support level. Because now, if you watch a different chart on this, you can see the structure, how it's reacting. Low, high here, higher low, but again, hasn't formed any new higher high. So this current point forms some lower high or low, lower high, didn't create new lower lows, came again, liquidated this current area, as we have seen on the previous area, liquidated, and then again, seeing this market coming all the way down, creating new lower lows. And here you can see some lower highs which have come, liquidated that current area. And now we are looking at this market melting down all the way to this current area, to this extension level, that's negative 27. And as I say, let's be patient with this market because again, it's going to be giving us the structure very well each and every single time. Here, if you watch it on the daily time frame, you can see the market has been still forming the similar structure, lower high, lower low on the daily structure. And again, lower high, lower lows. Looking forward to see new lower highs. You can see the swipe of this current area. Again, it may call it a fair value gap or whatever you may want to call it. But this is the gap in this current area was filled. And again, the market has now started rejecting this current level. And I'm looking forward to see it form some lower highs to create new lower lows to see this market continue melting down. So that's all on that dollar index. And again, lastly, a different chart or a different pattern on this. That's the monthly support. We have the monthly support here. This one I need to change, adjust them. And the resistance. And we have the monthly support down here. And there you go. And you look at this current structure. The market is will now be trying to create some slight, itself some slight point of interest. These are huge sell that have the head up and here previously these are 50% Fibonacci level. And again, here we had a huge gap, but I can see we have broken it below it. And when I look at it, this is not the weekly resistance, weekly support. Looking at it on the lower time frame now. This current area, the market came and created some weekly low, some for daily low high, lower low, lower high. Looking forward to seeing new lows be created below this fundamental support level. And you can see the structure where it's reacting out. Now it's the mid level. And when I take out also my Fibonacci levels, market doesn't decide to break up this current area, 70.8. All that I could be waiting for to see is of the market can rejecting that current area and trying to extend or break below this current month support, come up with this current area. You can see now from this current level, we'll be approaching eventually our major point of interest, which is the next support level, alongside the price of 97 or again 96.5. So I'm still looking forward to see the meltdown of the dollar. The dollar is continuing to melt down, and this current area, you can see the structures here had a major point of imbalance, and this is current area of imbalance that I would like to see pin filled. So if we could get that continuation of the sell-off, then that would give us momentum of understanding that some of all these major pairs, we are looking forward to see them heavily bullish. That's the major pairs. But unless the market doesn't decide to break for this market, if it decides to continue pushing up, then fucked up. But at the moment, still remember we have the NFP. You never know where the market will liquidate itself. It's a very crucial week, a very, very crucial week. We may jump on earlier trade, then again we can may see this current level, which again on the substructures of the 4 time frame. Look at it. Substructures of the 4 time frame. The market doesn't reject this kind of area. You never know where this market come all the way to this kind of area, reject it. So let's try to extend this. And I'll guess up on some 10 minutes discussing about the dollar index. So at current level, if the market doesn't break trading below the weekly resistance, then it's over here, and then again at the end of the week you see it continue selling off or again keeps a bit low high. So you don't know whether the market will reject this current area, this current point, break and come all the way down here, or again will it liquidate slightly to come again at this middle points of balance, try to liquidate, take out good liquidity, some liquidity, then again see this market melt down. So we have those chances of seeing this market continue heavily bearish at single time moment. So I'll also check my moving average, shows some slight trickle, some liquidity by the point. You may call it manipulation or whatever you may want to call it, but it depends on whether you get your entries. So I'm keeping watching how the market here, because again, on trading, you can see how the market closed heavily bullish. So, but again, it did break the previous high. 6 March, it says March. How tomorrow it will close on Monday? How it will take candlestick close on Monday will tell March. Because again, you can see it have been resisting for several days, for several for or again for 1 hour time frame. So right below this, then you'll be now coming at the end and trying to continue selling off. So without having that in mind, I'll not be quick fast now. These are the major pairs. Again, most of these are now the major pairs. It's now we are looking at them continually bullish, but unless the market or the dollar tries to continue and decide to behave bullish, no. But you're saying you're looking for some bearish and you still got that, not unless something changes because of the week. So now these are the pair of discussion. Now, first pair of discussion is the obviously, and obviously I've been looking for to see continuing with bullish. Remember the straight, you've been looking watching it all from this current level, from the 0.65, and you're looking forward to see it come over to the 0.67, 0.68 around those prices. So at these current points, you can you look at them, the major resistance levels are again reach points, and that's where we are the journey we are expecting to head to. Because again, you've been having higher low, higher low on the weekly frame, higher low, higher low, which is holding up the structure. And this structure here, we have a descending channel. Whenever I have a descending channel, I always let the market or see the market heavily bullish. And we have created new high highs. Certainly, we are trying to create new high highs. And hopefully, this week or again, the course of the week, probably in the course of the month, we may expect to see new high highs whereby the market will break above the weekly the boundary resistance here. So this is the boundary resistance, and we would be expecting this market to continue to be bullish. This is a structure whereby the market has been very high, low, high. This was a middle point, a major liquidity point, and again the market broke about it. So once the market has broken about that major point of liquidity, then and come and retest it, you can see we broke all this middle point of liquidity, came again to the current area, which again has confirmed as the weekly support. And now all that I'm watching in this week is looking at the lower time frame. That's the 4 time frame. People see this market here trying to bring some slight descending channel, and as I was saying, whenever I see a descending channel, the next move is always heavily bullish. And for the trade, we have a chance of seeing this market heavily bullish, not unless it breaks below this current area. This chart, not unless it breaks below this current level. So we have a chance of seeing these prices coming all the way to 100 pips, depending on your entry. So you, I don't know, certain behavior. I'm already up there. depending on your entry, as I was saying. So you better be watching it on a Monday or on a Tuesday, because again, you expect to see this market break above this current area. So that's all again on OBSD. Hope for just okay. But, so that's all I'm expecting in OBSD, and slightly problem is expected on the current area. So the number of pips you can risk, and the market decides it wants just 35 and come all the way from the point. Let's see also, can it come to this 50% of the strong point trade? Which it was of interest, could it come there? More than no part, as I said, it just expected 6 mile will be created, and for that level, we could expect the continuation of that heavy bullish move in this chart of this market. So next discussion is New Zealand USD. New Zealand USD is one of the direction of the USD. And for this structure, you can see similar pattern. Again, it has come trying to liquidation some major point or higher low. When you watch the liquidity time frame, the market has been trying to resist at some major point. So if the market support and resistance, and again here the market liquidity itself all the way, and all that I'm looking at in this market is to see if the market will break of this 12.8, come to this 78.6. We have a chance of seeing this market because again that to this current area or this current low. This is the weekly support considering the major point of imbalance which has been respected several for many weeks, 3 weeks. You know, this is another new week. So could we get to see the market try pump or again create some support level or again higher low and continue heavily bullish, try bringing in above the market resistance, and again attempt. So anyway, you know, Telegram is always misbehaving. So what I'll do, I'll just cancel Telegram, then I'll let Zoom record. Oh man, I don't know what was happening, but I don't know how long it's, I don't know if it's now a new one or it's just a, but anyway, I believe you can. I don't know what I'm sharing the screen. Let me see. No, I don't know what I was just Telegram's again printing some shots here and again slows down everything. Telegram break slows down everything. So again, sorry for that. Probably it's 5 minutes late. So anyway, now we have a next discussion which is the New Zealand USD. I don't know how you can view the screen. Yeah. So everything else is back in order. So for this value, as you can see, we are looking at continuing heavily bullish. And at this current point, we are now trying to come this current major level, which again acts exactly as a good level of imbalance or against major support level. High low, high low, previous new high highs. And again, it's back to this current area. Trying to circle liquidity, checking on straight up, I can see that is on that day. And again, on Friday, you can see some good support level was formed there. And now this chart of this market, we're looking at it, the lower time frame, the substructures of the forward time frame. You can see that the market has already created some heavy bullish move, which again I'm watching to see it break out the previous daily resistance and again closing in above it and come all the way, you can take out this current weekly resistance and over to this current point from the current level to this current area. It's close to 70 pips. Even coming all the way here, that's close to again 80, 90 pips. So what else do you need? And this, we are looking forward to this market break above this current area and come all the way to these prices. 0.59. So we have a huge chance of depending how long we want to be in this trade. but I'm looking at it in a swing momentum whereby if the chapter swings from this current close, then well and good, you are good for the gain, and things can just be running up in the first quarter of the year. So next big discussion I want to talk about is euro out, and again for euro out. We are simply looking forward to see the obviously heavy bullish. You can see I always trade the euro out against the out USD. And for this structure, for this market, you can see we have a major point. This is the market whereby these structures, where the market has created some new manual resistance. And again, this is the manual support. Manual resistance, manual support is down here near the liquidity point, or again, some institutional point, price level, which again is the price of 1.75. And for this chart, we could see this market coming out and liquidate itself even below this current area, or again to this 17.6. First, that's close to 100 pips, and I'm looking forward to see even break below that. Watch to the weekly time frame. We have this huge imbalance here on a weekly time frame. Will this market even come all the way down here? That's close to 500 pips. That's what I'm keeping on asking myself, because again, we have a huge game plan here in between this. If this market comes all the way here, and so I break below this liquidity point, then I'll be letting you to melt down on this first take profit level, and then again to this next level. That's conforming to 100 pips, and that's so easy for us. But what I mean, again, see how the structure that the market is occurring here is create some lower high, lower low, lower high, daily lower low, lower high, lower low, daily lower high, and again, you're not creating daily lower lows below this current area, the price is 1.75. And so, why can we get our entry? That's all that we need to understand. Why can I get my entry in this market? Because again, now this is a range. Do you not come back to this current area? Swipe out, because again, for this lower high, it hasn't given us any new lower lows. So, this market come all the way down to this current area, give us some good lower high, give us some better lower high, or again, will it start melting down all the way, probably from the start of Monday during the Asian session? But again, once we close the Asian session, then whatever will happen in the London session on Monday to decide how the market will close. But we have great chances or great opportunities in between these current points of imbalance. This market come close to again that 70 pips all the way up here. A break above that, I'll be letting it come, liquidate itself for a time frame, liquidate itself once the market is around this previous area. Then again, I'll be letting it swing around with it from this current area to this current levels. That will be close to more than 200 pips or even 250 pips. So it's a good game plan whereby here the market is just ranging, and I'll better jump on it at a better entry level, which again is a good better point of resistance. Then again, I'll be swimming with it on that market sell-off. So that's all again on the euro out. And again, next pair of discussion we have is the euro New Zealand. And for the euro New Zealand, similar reaction. You can see we are trading in between major levels or a major point of range. This trade, we are trading at this price slightly below the 2.05, which again is a institutional point. And again, this is the resistance, manual support. If you watch these on the daily time frame, these structures are just creating lower high, lower low, lower high. But looking for see, let's see this area didn't give us any new lower lows, but again, we have created and liquidated. Give a better lower high, which again we are looking for to see it could break below this weekly support and below this monthly support. And why is the next level that we could be anticipating to this chart? Hopefully, if this market breaks below the monthly support, then I'll be watching it come all the way 500 pips in between this current area, because that's the next major liquidity point that I'm watching. So we have crazy number of pips that we can jump on this. Depends on how you want to take this in. So here the market has been forming up. Watch it on the 4-hour time frame. Lower high, lower low, lower high, lower low. Came all the way, wiped out some lower high, came all the way, gathered some lower major momentum here. And now you've now come back to this current area, taken out this current imbalance point, and now the market is still melting down all the way. Looking forward to see it break below this current area. That is close to 200 pips so far. That's close to 200 pips, or 190 to 200 pips. And a break below that, then watching it break below the monthly support, that would be quite crazy or quite insane. And we'll be riding all the way down with it. And now we have this pair of discussion that is gold, and many of you probably are waiting for to see how gold will be reacting in the next few weeks or again the next few months. This is the monthly support. Last month it created weekly support, weekly resistance. We are trading in between these current prices, the 4,300 and again the price of 4,500. That's insane. How many number of pips? Close to 2,500 pips. So if we watch this chart on the lower time frame, that's the daily. Again, we watch it on the weekly time frame. The weekly time frame, we came and again tried wiping out liquidity in between this current area, the major support level, the exterior part of it, and again the interior part, the exterior part of it, the exterior high and higher low. And here we have come and tried wiping out liquidity. And again, what I can see here on the daily time frame, on the weekly time frame, sorry, how is this market will this market come back again, try to take out this liquidity? Was when I watch it on the on the daily time frame, we have this major point of imbalance. Could this market, with all these pressure for sellers coming in all the way here, liquidity itself gain some momentum of here support, then again take off? Again, have you watched this current area? It's high low. Major point, could it come, liquidate itself all the way to this price of 4,250, then again start taking off? I have also these other understanding of this market. When I watched on the 4-hour time frame, the market here already tried wiping out liquidity below this current area of this 4-hour time frame. And now whatever we are trading at is this higher low and in between this higher high. So don't really necessarily need to come back all the way down here. It could have swiped out that liquidity. You can see how the market broke above the 4,400, 4,300 price level, came all the way, creating some new high, and again has supported well at this current point. And that's a good bullish doji that has been formed up there. And when I watch it on the 4-hour time frame, sorry, 1-hour time frame, this was the major point that the market was trying to fill this gap. And when I watch it now in this manner, I can see we are trading at a 6.8% Fibonacci level. So could this market gain momentum all the way from this 6.8, or could it come up just slightly, liquidate itself at this 70.6, then gain momentum again all the way to this price level, which will be confirming and giving us closer to, depending on the entry, 1,200 or 1,300 pips. So I'm keenly watching how the market will react on this trade, because it's one pressure trade that I'm on, and the current prices are my entries. And so it's just a matter of time and to see how things will unfold, and how things will unfold on Monday or again Tuesday, and before even NFP. So last but not least, we have the Euro GBP. Euro GBP is another crazy pair that we have been trading with it all the way down. It has been playing around about 100 pips, obeying, and so yeah, it has been obeying. Let's say so, because I would lie. It has given me some feeling about pips. So we have another resistance, no support. When you watch it on the weekly time frame, we are now trading at the major support level. Do we buy at the support or do we sell at the support? Now, this current chart, we have this major area acting as a major support level. That's the weekly time frame, and also the monthly support level. So here we have our daily candlestick. This is the previous daily high, Friday high, and this is the Friday low. So this current area, or this current chart, I'm patiently waiting to see if this market could give us a chance to continue breaking below the monthly support and come to these major levels. This is the higher low. Because again, we have a chance from this higher low. This is the interior part of it. The exterior part of it. And again, higher low, higher high, higher low, higher high. And now the market is melting down. We are now here at the 61.8%. It's quite insane wherever the market's trading at. So let's go get rid of this. All the way down here. That's our 61.8%. And we have our 78.6% price level, our liquidity point. Now, these liquidity points, they are quite crucial for me, because again, you can see now my 78.6 reacts to the major higher low, this current area. So could it be wiped out? Because that's close to another 50 pips for me. Yep, that's a good price level if the market can come just down there. But we need to see some. The market doesn't really just come break below. No, I would like to see it slightly pull back. Give me a better entry where I can reach something small. Then again, I could wait for it to melt down. Is because again you'll be trading closer to 70 pips. And again, what are you risking? Closer to 20, 30 pips. Depends on you. So last but not least, we have is GBPUSD. GBPUSD, I'm looking forward to see continue heavily bullish. And for this trade, we're not trading in between this market structure, these major levels. Uh, Lower high, we created some lower low, lower high, we created some lower low. But again, when you look at this structure, what is it? Higher low, higher high, higher low, no higher highs formed. Came liquidated all the way down here, wiped out that liquidity, and now it's now trying to gain momentum, come back to form at that wall here. And now at this current chart, whereby we have this the monthly support, monthly resistance, we are trading slightly below the is an institutional point, an institutional price level, the 1.35. And when I watch it, is the weekly support here. We have the weekly support there, and then we have the weekly resistance up here. And this current chart here, we are trading. We started this buying all the way from this current area, and we have been obeying the structures whereby it has been following up these structures in this manner. We have this area, 61, 50%, 61.8, and again the 78.6%, or again the 85 price level. So the market has been obeying that structure. If you watch from the substructures of the daily. So has market been creating? Higher low, higher high, higher low, slight pullback, higher high, higher low, higher high again. Came back all the way from 61.8, came, created some good higher low, rejected that current area, came all the way, created some new higher high, come back and again tried rejecting this current area, the 17.6, retesting that current area. You can see this huge major point of imbalance, which has been retested, and it has confirmed that this is a major point of imbalance, because when I watch it, it's coming at a major structure or a major support level, touched that current area, heavily rejected it, and I can see now the market is now trying to gain some momentum, and all that I'll be patiently waiting to see is some slight pullback in this chart to gain some higher low, probably below at the daily support or the Friday low. Then again, gain momentum and see this market create some new high, because we are trading in between this higher low, higher high, higher low. Looking forward to see new higher highs being created, and that's closer to 130 or 150 pips. Lastly, we have the US 30, and for this trade, I've been last week it missed. It missed me out with just slightly, but slightly. My stop loss is just slightly here. And I didn't see this happen. I was thinking to close this trade because I was waiting to see it would come all the way down here, but that didn't happen. Had that massive rejection, and now this is the daily resistance, and this is the daily support, which again confirms again as a weekly support. If you watch this structure, we have this market trading in between these levels of this pattern, higher low, higher high, and this structure is trading is coming again. Trade coming liquidating at this current point, the market liquidated this major level. And all that I'm watching to see in this chart is to see this market create some new higher highs at the price of 49,200 or even 49,500. So when we watch it on the lower time frame, that's the daily time frame, that's the substructures. These are descending channel. Whenever I see a descending channel, the market creates a huge major bullish momentum. And I can confirm that this is a higher low, this is a higher high. You can see some huge rejection here, and I'm watching to see this market come to these extension levels. The price of 49,200. You can see also when you watch these structures, how the market is trading, or this pattern, that heavy rejection, all that we could be anticipating to see in the lower time frame from 38.2, all that we can patiently probably wait is to see if this market structure would give us some slight pullback on the 1 hour time frame. That's during probably as we await the New York session tomorrow. And once it gains some momentum from there, we could see now this market heavily bullish, continue heavily bullish. And this year, I want to keenly focus on the US 30. It's quite volatile. And again, it always respects structure. And I would like to trade it to see if I can maximize my number of pips again. Close. If you watch this from this current level to this current A, that's close to 100 pips. And what are you risking? Something small, very small. So I would like to be keenly trading this pair, watch it keenly, and again, execute it, because again, it's also quite volatile. If you miss out on goal, you better trade the US 30. And so, guys, if that's all, I would like to stop it at that and leave it at that. Make it just decide whether I want to go enjoy my weekend, summarize it all, kill it, and looking forward to see a great week ahead. So be patient again with all these trades as you trade. Be patient with all these entries. Again, don't be in a rush. Don't over risk. You can just execute 1, 2 trades and wait for it to move. If it depends on your account size, or if you're trading foreign accounts, if you watch even winning like 2% or even 3% or even 2.5%, depending on your execution or how heavy you risk, you could win quite insanely. So let's be patient. And again, we march forward as we anticipate to see an exponential 2026 in our trading. It's going to be massive and it's going to be crazy. I believe it's going to be massive and it's going to be crazy. I've been telling many, it's just now that I'm sharing all this with you. A time will come and I'll disappear. Where will I disappear to? I don't know. But I know whatever I'm sharing, it's free. Whatever I'm discussing here, it's whatever I'm taking. So it's up to you to decide on how you can capitalize on that also. Like if you don't understand the structure, I've been in the market, how I trade, I've been doing it years and years back. And I'm looking forward to see now this year because I'm back now to trading fully. Looking forward to see an exponential 2026 and let's meet up at the top. So that's all, guys. In case you have any question, hit me up and I'll be ready to answer. So it's adios from me and bye bye.